Welcome to Bar Charts Market and Close. I'm your host, John Rowland, Bar Chart Senior Market Strategist. And on today's show, tradable top or buy the dip opportunity? Buy the rumor, sell the news. Can chicken nuggets be as valuable as filet mignon? And as Apple goes, so goes the market. All this plus your questions, and to help me is my co-host, our Mr. X, Twitter Tom. Hello, Thomas.
Hello, John. How are you?
I'm doing well, and yourself?
Doing good. I'm out in Turkey. Not
Turkey.
not not a turkey sandwich. The country Turkey out in right by Europe.
Well, did you get lost? Were you driving to Wisconsin and got lost or something?
I took a wrong turn somewhere. I kept trying to figure it out, John. I just couldn't quite put my finger on it, but making the best out of it, right?
All right. Well, here's the question: Istanbul or Constantinople?
Well, I think I heard the song. They've got a famous song that goes Constantinople. I listened to that out there a few times, but yeah, go with Istanbul, I think, John.
All right,
All right.
brother.
We got a jam-packed show. Just want to give everybody a quick reminder. If you're watching directly on our website and you want to ask a question, just click Ask a Question at the top right. You'll see it in the orange color. And if you're watching on any of our social media channels, just go ahead and ask those questions directly in the chat or in the comments section. All right. So, John, the stock market, the S&P 500, absolute machine, continues going higher and higher. We've talked about seasonality before. I think by now, John, everybody knows August and September are weak months. We're not seeing it yet, but I saw another data point that was pretty interesting, I thought, John, and that was the presidential post-election year data. So this is data going back to 1950, and it shows that stocks have always, again, let me repeat that, 100% of the time have finished red during August of a second-term presidency post-election year. So obviously Donald Trump was reelected last year. This is the post-election year. If history is an indication, John, this month is going to be red. Just want to give everybody just a little nuance here. All of these presidents were back-to-back. It was Trump in 2016, and then Joe Biden, and then now Donald Trump again. So a little bit of a difference, but nevertheless, John, I thought this data was interesting. What's your take on it?
Well, my first take is I think we can look at this data because if you think about the second term of a back-to-back president going into this time frame, you start thinking about the midterm elections of a president that is who's running out his last term. So that I think there could be something to that. But yeah, this is something that we can have fun with this and we can kind of look at this, but let's look at the evidence and see what the market is telling us. And certainly, since we left last week, we were off last week, 2 weeks ago, we were just saying, hey, the market's continuing to crawl its way up this little staircase. Now, something did happen, though, last week, which was kind of interesting, is that we got a bearish engulfing candle, as you can see right here. Now, candlesticks are subjective, right? But if you could put a candlestick into a proper context, and in the case of a reversal candle, I think after an extended long bull run and where that bull run is starting to, disintegrate or start to, run its course. So I think this is more significant because of the fact that it's exactly what we had been saying is that, market breadth internals had gotten weak and momentum had gotten weak and volume was low, right? It was more of a mechanics market than it was anything else. And so I think we have to respect this bear candle because it tells us there's a change in sentiment. Now, I wasn't surprised that when the market, dropped on that Friday and then on Monday morning, we got that dip buying mentality. And I thought maybe we'd get back up and fill the gap. What did surprise me this week is how far we crawled our way back. I was very surprised. I thought we'd have a difficulty time getting above, around 63.50. But here we are, like you said, the bull market continues. Now, what's interesting about this one is not only did it happen on the daily, but it also happened on the weekly. And again, look at our weekly candle. We're still back above. So, Thomas, I think it's more the same, right? We're kind of just in this range. And, as long as we stay above, right, we stay inside this channel, I think we're gonna continue to move higher. But now what we have is we have a tradable top. In other words, we have a roadblock in this path of least resistance. Before we were going into ether, right? There was nothing to stop it. Now there's something there, so we got to watch that. But it doesn't mean that the market's going to crash, right? It just means we could have a bit of a correction, and that correction could be, to the bottom of the channel, like we see again here, or we talked about a 4-week low or the 50-day moving average, and if we look at those parameters, they're all confluencing together in a very similar place. Actually, let me go to, and this is good. Yeah, so you can see the blue line here is our 50-day moving average. The red line here was last week's 4-week low. So again, even if we broke out of the channel, I still think you can't really be bearish on this market until you take out that 4-week low and you break below the 50-day moving average. So as long as that stays intact, then I think it's just, more of the same, more things. This time of year, it is kind of boring, right?
That is the perfect word, John. I have felt slightly bored with this market. I think, most years, I think people expect August to be a little bit boring. They're kind of waiting for Labor Day to come back where the excitement starts again.
So next week, it could be get exciting. Now, we're still in the middle of earnings season. Now, the top 10 of the S&P are pretty much, we've heard from all the Mag 7s except for NVIDIA, which is not until late August. But I just want to show folks this. So, I'm not making a bear case. I just want you to be aware of something, and that next week we do have our monthly expiration. And if we look at the put-call ratio, you can see that the put-call ratio in terms of open interest here, we've got a 4-to-1 puts to call. So, there is this idea or this market mechanics that on expiration, the market tends to gravitate to those strikes that have the largest amount of open interest. So I just want to kind of do this real quickly and go in there. Now, let's open up. I need to expand my range here a little bit and kind of see where we're at. So let's look at the put side first, because that's where most of the open interest is. Now, a lot of this open interest is way out of the money, right? Again, think about it like fire insurance, right? So, there's no way that a lot of these options are going to get exercise. But we do see start seeing some clusters here at around, every 5 points, 630, 625, 620. But at 610, we have a huge amount of put open interest. Now, market makers will try to hold the market up so that all these puts expire worthless. So we have to look on the other side of the coin, though, too, right? They don't want to keep the market up too high, because then that brings in calls. And so we look at where we got the call open interest. So, we're right around where we have a little bit of a cluster. There's some around 640. So I think for next week, I think that maybe that might be your upper end range, or at least a temporary top, which is near our all-time high. But we do have a cluster here around 630. So my inclination is that next week, barring any kind of catalyst, then we're probably going to drift lower, somewhere around that 630, maybe even below that, maybe 625. Now, if we get some kind of bad news catalyst, something that comes out of one of these negotiations with China or Mexico or Canada, we have to be aware of this market mechanics that the market likes to move towards these large open interest strikes. And if we look at these large open interest strikes, 625 and then that 610 level. Now, let's go back to our chart real quick. Hang on, let me go to let's go to the SPY so we can kind of relate this all together. Those levels line on with these confluences of our 4-weekly low, our 52-week average. And if we look at, supporting technical evidence, the relative strength is still looking good. It bounced off 50. That's a good sign. Bull markets tend to hold 50 and then continue to go up. but the momentum, right, that internal momentum, is flattened. So again, a lot of the mixed signals here from our technical analysis. So I don't know, Thomas. I don't know. What do you think? I mean, more of the same, or do we get a little market mechanics next week?
Well, one thing I have been thinking about, and I wrestle with this a lot, John, is I feel like everybody is expecting a correction in August and September. And I am a bit of a contrarian. I like to, when I can, and when I think it makes sense, I like to angle myself away from the crowd. And what do you think? Do you put any stock in the idea that so many people are expecting this sort of big dump that in the next 2 months that maybe it makes it less likely to happen?
Yeah, I can buy into that. I can buy it. Now you talked about a significant uh, data point that you found. I read one this morning in Barron's, which was quite fascinating. And this one looks at the equal weight S&P versus the tech sector. And what happens is it looks like the tech sector RSI is above 60. Right now it's 64, where the equal weight is below 50. Now, this has happened 6 times since 2006. And 5 of those 6 times had a correction of 10% or greater. So again, does this mean that the market is going to correct? No, it's just another piece of statistical information that is swaying the pendulum towards maybe a little bit of a lower to the downside. And my thought is with the mechanics of options, because we have such a huge dispersion between options to calls next week, that might happen. So that's the way I'm leaning, brother.
Well, I think we've given everybody a lot of information, both bullish and bearish. So, guys, place your bets. We wish you the best. We're hoping for ourselves as well.
Yeah, I don't know. Who knows, right? So we'll see. We'll see.
All right. So, John, over the last few years, we have added a lot of writers to our team. We're trying to build out our news department, cover a whole wide variety of topics within the finance space, particularly the stock market. And there's one article that really caught my attention this week, and it's from one of our writers, Josh Inamoto, who covers BP and the idea of unusual options potentially flashing on the name. He walks through his ideas, his methods, his valuations. And it's an interesting topic, John, because there's a lot going on with BP. And I know this is sort of more in your world than it is mine. So can you kind of break down what Josh was talking about here and how it sort of fits into maybe some other ideas you were looking at?
Yeah, well, we'll get to the BP story in a second, but if you're not reading Josh's articles, and we have a lot of great staff writers, you're really missing out on it. I think Tom and I both talked about this. We look in the markets in different ways. And when we talk about Josh, he looks at the market even from a different angle, which is really interesting. He looks at more from a quantitative probability aspect. So I really appreciate his work, and I think it's a good job. Now, what he's basically saying in this article is that an unusual options activity doesn't necessarily mean that the market's going to make a move. You have to kind of dissect it. And so he goes in here and he tells you what, the parameters that he's looking at. So first of all, he's looking at volume was up 200% over a monthly volume average. You had a 4 times call to put ratio, and then we had a favorable options flow. In other words, a bullish flow. So that would be a good indication that something's going to happen with BP. And then also he looks at statistical probability in this quantitative analysis. And in his analysis, he's looked at number of up days and number of down days, and then what signals and what was the follow through afterwards. And his follow through was 10 days post. But in his scenario, what he discovered here, it was a 62%. So it was a very strong possibility that he was going to see a follow through. So the trade he looked at was based on an unusual options activity. I think it was the 33 calls. And he just did a very simple 33-34 call spread, or a 32-33 call spread. Let me just double check here. Yeah, 32-33 and a 32-34 call spread. So let's go back in time here. And here it is, the 33 call spread. And there was the unusual options. You can see there 15,000 volume. And again, notice that the volume actually went down. The open interest went down. So this is probably maybe when somebody was liquidating um, prior to it. But this is on Wednesday, so this would be Monday was the trade. I think was the unusual options trade. But look what the options did. It went from $1 to almost $2 by Thursday. So we're talking about a 50 to 100% gain in just a week. So kudos to Josh. He figured it out. He saw it and he played out. What I wanted to talk about was that in what has happened in BP is that on Monday they announced that they had found this huge reserve off of Brazil, and that re-sparked a flurry of rumors that BP was in merger talks with Shell, and this has been in the market for a while. BP now having more reserves, and Shell being a poor reserve oil company, it just kind of made sense. But Shell in June said that they are not in merger talks with BP, and under UK law, if you say that, you can't have any merger talks for a 6-month blackout period. So that squelches the idea of the BP Shell rumor for at least until next year. But here's the thing, Thomas. That reserve, that huge reserve that they found, they're the sole proprietors of it. And here's a chart of BP, and this is in black. Purple is Shell, and the orange is our Exxon Mobil. So you can see that BP has definitely been underperforming price-wise to its competitors or other multinational oil companies. So it certainly makes BP a more valuable company, and it could give us an opportunity for it to do a little bit of a catch-up. But again, under the unusual options idea, I think it was more of a momentum trade. The news came out, buy the rumor, sell the news, ring the register, walk away. But as for an investment, let's see what happens, right? Let's see if BP can continue to maintain this momentum. Certainly, we can see that it does have a lot of catch up. And if we get into next year and the rumors do start again, BP is only a $90 billion company versus Shell, which is a $290 billion company. And just to give you reference, ExxonMobil is a $450 billion company. So it's just something to think about. And, it's kind of this idea of blending options with rumors, what's making the market move. And then, kind of taking a step back and saying, hey, there's something here, but, I might have missed the trade, and maybe I'll sit on my hands for a while and see what plays out for the next 6 months, right?
All right, John, I'm going to switch gears a little bit. I want to ask you a few questions. Do you like steaks?
I love steaks.
How about burgers and tacos?
Who doesn't love a burger on the weekends, right?
Well, I got some bad news, unfortunately, for you and for me and for anybody else out there who loves meat as much as we do. Cattle futures, John, continue to go basically parabolic, just hitting new high after new high. And that was depressing me enough earlier this week, John. But then I saw something else which made it even worse. And that is the price of ground beef, John, which just hit a new all-time high. And, it's a problem, John, because not only do I love burgers, but in my household, we make it a tradition to do Taco Tuesdays. And some of those tacos are ground beef. So I feel like we have to cancel that now. Unless you can sort of talk me out of it, John. Is there any light in the tunnel here where these prices might come back and help us out a little bit?
Yeah, I don't know. I mean, I never really traded cattle for a lot of reasons. But let me just kind of pull up a cattle chart here, my cattle chart. So, yeah, you can see that cattle prices have been going up, not just as of recent, but they've been going up like this for almost 5 years now. So how did we get here, right? What's going on with the beef market? So I call up a friend, I'm a Jersey guy. And so, every Jersey guy has got a guy. And I got a guy who's in the beef industry. And, I called him up and said, hey, what's going on? And he basically laid it out for me. So here's what's going on. First of all, cattle herds inventories are as low as they had been since the 1950s. We've had a prolonged drought in these range areas, Texas, Oklahoma, Kansas. That's where they grow the beef. The high cost of feed has discouraged ranchers from reinvigorating their stocks. And even though we've seen an improvement in the range areas, the grass is growing, so to speak, a lot of these ranchers have been reluctant to increase their herd size for a lot of reasons. First of all, they have labor shortages, right? There's not a lot of folks who want to, ranching is a very difficult job. Costs, think about from 2020 to now, interest rates have gone from 0 to 5%. So their operating costs and the capital costs have gone up. And a lot of these ranchers have retired. A lot of them were older folks, and they don't have any kids that want to take over the business. And so a lot of ranches are just disappearing. There's another thing is you would think that, as beef prices got higher, maybe we might get a substitute, right? And we're going to talk about that in a second. But you think about in chickens and pork. Well, chickens had the bird flu just recently. Remember, the price of eggs went through the roof, but they've come back as the chicken stock has come back. And in pork, we had the swine fever that hit China. So the substitutes had their own issues too, plus feed and plus operating costs. But those are starting to balance out. And then there's also tariffs. And, a lot of feeder cattle. So there's feeder cattle or basic calves that are going to be fattened and then slaughtered. A lot of the feeder cattle comes from Mexico. So there's a lot of barriers now. We don't know what's going on there. And then when in times of shortages, a lot of beef comes from Canada, processed beef and also live cattle. So that barrier has been thrown into a juxtaposition, or so to speak, with the tariffs. So all of this is adding up that it doesn't look like we're going to get any relief soon in the cattle market. And matter of fact, my rancher friend basically said that we're probably looking at late 2026 before we even start to see, some of these herds getting back to maybe some normal levels. So there's your answer to beef. But here's what I was thinking is, I had a friend a long time ago, a trader of mine, his name was Herbie, and he traded pork bellies. And Herbie's methodology was he'd go to the supermarket on the weekends hours, and he would stand in the meat section and he'd watch housewives see if they would buy bacon. And he would ask them, is bacon too expensive or is it too cheap? Or you see how many pounds they would put in their shopping cart. And if they were buying bacon, then he thought bacon prices were too cheap and he'd trade in the market that way. Or if they weren't buying bacon, then he knew bacon prices were too high and he would sell according to that strategy. And that kind of influenced the way I look at the world. I've always tell you guys, look at the world around you, observe what's going around you. And so I was at Costco a few weeks ago, and you're talking about hamburger. I remember seeing this husband and wife. The husband went over to the meat section. He got one of those big tubes of hamburger and he put it in his shopping cart. And the wife came back over and looked in the shopping cart and looked at that big tube of hamburger. And she shook her head, took it out, put it back, and then went over to the chicken section and picked up 3 giant packs of chicken wings and thighs and legs. So it looks like the American consumer is starting to make that substitution. So what I thought was, and again, this is how you kind of thread thoughts together, is let's look at Tyson Foods. Right? Tyson Foods is more pork and chicken. Now, we've looked at Tyson's before, haven't we, Thomas, right? I'm pretty sure we have. And we've been in this range. And notice how the market broke out of this lower range, but then it rejected it. And it rejected it hard. And we've got this nice little rally back into the range. Now, let's look at this from a technical aspect. It's still making lower lows and lower highs. But something happened. Some catalyst got the market to either start short covering or starting to come back in. And that was on earnings. And on their earnings, not only did they say that they were going to continue to pay their dividend, but they were also going to do a dividend, do a share buyback. So that was really encouraging for Tyson's. And you can see that sometimes earnings can give you like a 1 day shock in this particular stock, but now we see multiple days, right? Multiple momentum. So I think this is a really good sign for Tyson of this idea that consumers are going to substitute, and that Tyson is now becoming a little bit more healthier company because now their products, chickens and pork, are more competitive with these rising costs of beef. Now we still have some barriers. And one of them is there's a little area of resistance here that we're coming up against. So we need to clear that. If we look at, let's say, something like Bollinger Bands, which I love looking at, what I like about the Bollinger Band trade here is that, our Bollinger Bands are turning out. That's usually a good sign of volatility. That's a good sign of momentum. And, but we have maybe gotten a little bit ahead of ourselves. But if we look at Bollinger Bands from a weekly basis, and this is really gets interesting, Thomas, is remember that little area of resistance we saw on the daily, and that lines up with our mean with our weekly Bollinger Band. And you can see that this week we closed above there, now right into that area of supply. But if we can get above here, we're really open space. Look at this large gap that we have that could send the price back to 60. And typically, when you have one of these scenarios where you break out of a range and you break out, fake out, you get this snap back in. So I wouldn't be surprised if the market snaps to the outer band on the upside, which would put up around 62.50. But I still think we could even see the higher end of this range that Tyson has been in for, well, almost over 2 years, between $52 and $66, $67. So again, this is more of a momentum trade. But I also think this could be something that we can think about as an investment opportunity if we continue to see strong beef prices over the next 6 to 12 months.
All right, good stuff there, John. So, John, there's a stock. People have been calling it dead, calling it legacy tech, that we don't need it anymore. I've been giving it a lot of flack on social myself because for a long time, it's been the only Mag 7 stock trading below its 200-day moving average, which is really just awful performance, John. You look at a stock like Tesla, which hasn't been doing that great either, but at least that one has sort of been up and below its 200-day over the last few months, whereas Apple has not. And I have a pretty big Apple position, John. I thought it was going to have a good year, but it has been a huge laggard. But I noticed yesterday, John, when we were doing our planning session, I noticed that it looked like it was picking up some steam, had 2 really big, strong green days in a row, finished just below its 200-day. And I thought if we get one more sort of green day, John, that it could be off to the races, and that it looks like that might be happening. Do you see it the same way?
Yeah, you asked me to look at it, and it has been off of my radar as well, and so I did look at it, and the more I looked at it, I was like, yeah, there's a lot to be positive about what's going on with Apple. So first of all, let's talk about, there's your black line, which represents our 200-day moving average, and today we broke above it. Early in the week when we did our planning session, I was saying to you, well, yeah, there's some good positive momentum, right? We bounced off the 50, we crossed over the 20-day. And I said, well, let's see how we react at this gap fill. And we got right into it on this day. But then also, one of the things we did on Wednesday's webinar, we talked about average true range and how we can use average true range to help us confirm breakouts. And I use a 1.5 times average true range. So what I have here is different colors here. And the red line represents the high, this close of this area of resistance. The blue line represents the 1.5 times ATR breakout confirmation. And again, confluence of 2 variables, 2 different technical analysis that come together. And boy, what do we get today? We broke above them very significantly. So this is a very good sign for Apple. And if we look at it from, let's say, again, look at our Bollinger Bands. I think you're going to see this similar story like we saw with the Tysons, right? We're breaking out of our daily range, which had been coiling, right? That's a very strong sign. Again, probably a little bit ahead of ourselves, but on the weekly, right? Again, maybe a little bit ahead of ourselves, but on the weekly, we're getting our weekly Bollinger Bands are expanding out. Again, I think this is a very good sign of strong momentum. If I add something like an indicator that helps me to define trend, like the ADX, right? The weekly, yeah, not really getting that trend confirmation, but today we did see the positive, or the DI positive is crossing over the negative. That's a good sign. That's usually a buy indication. We really like to see the ADX above 20, but on the daily, boy, look at that. We got the crossover at the same time. We got the ADX line above 20, and Wells Wilder told us that that's the combination that he looks for. When the DI positive gets above 25 or crosses over, and you get the ADX above 20. So all of those confluences to me really seems like maybe Apple has some momentum. Now let's go back to our chart and a bigger picture. Remember we talked about V bottoms, Thomas?
I do.
And what did we say we could do? Once we broke above the V bottom top, so to speak. We talked about projection, right? So we look at the depth, the trough of our break to the downside. Once we recapture it, then that breakout we can extrapolate to the future. And again, notice what we see here, that if you are somebody who's looking for some encouraging signs at Apple, you got a lot of nice technical analysis here. And the last one that I see here is this multiple projection that gives us an opportunity to shoot for, looks like, our all-time highs. So, we talked about Berkshire Hathaway like a month ago, and we were saying, how come Berkshire Hathaway is on its lows when the market's at all-time highs? And, one of those old adages is, as Apple goes, so does the market. And we said, how can the market make new all-time highs without Berkshire Hathaway? And what's Berkshire Hathaway's largest position?
Apple.
Apple. Yeah, exactly. So again, more evidence of what we suspect is going to happen, right?
You know what's funny about that, John? Warren Buffett sold a lot of his Apple position earlier this year, and it's still by far the largest positions. Just imagine how big it actually was at one point.
Yeah, right. I think he said that Apple's made him more money than any or all the other stocks he's ever owned through the history of Berkshire Hathaway put together, which is pretty amazing.
I don't
right?
doubt that. I don't doubt that. And Berkshire Hathaway, no doubt they've struggled a little bit this year, John. But the Apple sale, that one wasn't a mistake. That was the right move for quite some time, maybe until this week. So,
but if you look at something like a legacy, right? You think about Apple as a legacy technology company, and here's Advanced Micro Devices. So let's get off the weekly here. Let's go back to the daily. That chart is eerily similar to what we're seeing in Apple, but it's much farther advanced, right? That V bottom, you had that little consolidation, and then you get that breakout, right, where you go and test the all-time highs. So, maybe because Apple just was lagging because of this weight of Berkshire Hathaway selling on it, now that that's over, the path of least resistance is back to its old all-time highs.
Absolutely.
All right, brother. All right.
Very good. Hope you guys enjoyed the show. Please share, please comment with your friends if you get a chance. We really appreciate it. John, you ready to do some Q&A?
I am ready to do some Q&A.
All right, let's see what we got here. John, can Barchart's stock screener help with identifying European oil exploration stocks?
So you have to come over here to the right, I think you got to do, and change your default. And if you go to European, and then I think what happens is, and again, this would be a question I would ask our support staff, is I think then now it will screen based on European countries. There you go. So there you go. Yes.
And if those stocks that you're looking at, if they have an ADR, then yes, they will show up in our regular stock screener.
In the regular stocks, but you got to know if they're European companies, right?
Exactly.
Yeah.
All right. Let's see here. John, what about Trump's tariffs or potential tariffs? I don't know if this is actually a thing yet on gold bars. Could that have an impact on gold price?
I haven't seen it. I just know that they did something with the Swiss, right? They increased the tariffs of Swiss, imports or exports, and Swiss makes gold bars and watches, right? I think that's and chocolate, right? So, I can't really make a comment on that because I don't know what the details are. I think for me, for gold, it's more about the dollar, right? What's the dollar doing? I'm just looking at the dollar index here. It's back down about 98. I think we looked at this, weeks ago. We said, hey, we thought we were going to see a mean reversion to 100. We got that mean reversion. So I wouldn't be surprised if the dollar goes back down to, the lower end of its range, which is around the 96.50, 96.70 area. And if that does happen, then to me, I think that is bullish for gold. So, that's kind of the way I'm looking at gold is what is the dollar doing, and then make that assessment how it relates to gold.
Yeah. And there was a little bit of kind of some wild price action in gold yesterday, which sent gold actually to a new all-time high. I think that was triggered, John, by some of these reported tariff talks about gold. So I do think there was some sort of impact there. But like you, I didn't dig into the story, so I can't really offer a lot of insight into that.
Just remember, folks, when you are talking about gold prices, right, there's something called the physical cash gold. And then when you look at the futures market, a lot of times the market will the headline news is going to give you the current contract month. And so the current contract month, the September contract is probably getting close to coming to expiration. But you can see based on open interest and volume that we're actually, this is crude oil. Let me go to the metals. That the volume in action is actually in the December contract, right? Look at that, 300,000 volume, and then the open interest is probably there. So you might be looking at all-time highs from the current contract, but we got to look at all-time highs through all contracts. And you can see that if we look at December, February, April, and September of next year, we go further out, you can see the prices are a lot higher. So we might not have made an all-time high futures-wise, or maybe futures-wise, but maybe not in the actual physical market. I don't know. I didn't see what happened, but because I saw the news that you put out that that it made a new all-time high, and then I went to the GLD, and the GLD didn't even budge. So that kind of makes me think that there was something going on between the physical market and the futures market. Okay,
100%, yeah. All right, I love this question. Question, John, is Tom. Couple weeks ago, you said ETH would break through 4,000, and it did. Yes, it did. It broke through today. So the question is, where is it going now? Well, my opinion is it's going to all-time highs because Ethereum still has not hit all-time highs yet, which I know it's kind of shocking because Bitcoin is way above its all-time high from the prior cycle. So Ethereum has been really lagging, but I think it's going to all-time highs, and I would expect that to happen maybe in the next 3 months, John. It could come a lot sooner, but I would expect at a minimum that it hits an all-time high within the next sort of 3 months.
Well, we haven't talked about crypto in a while, and we drew these zones, and we drew this zone. Obviously, we were looking at crypto back here. So it punched through this zone. It took a while, punched through, it finally did, and it blew through this zone. So that's a very encouraging sign. And then it based above it, and then now it looks like it's about to take out, your most recent highs. But boy, yeah, you're right. It's not that far away from 5,000, which would be the all-time high. So
hard not to feel bullish looking at that. All right.
Yeah, I agree with you 100%. But again, you need to clear these two highs. But this is the old snowplow theory, right? Double tops are good, but triple tops, I don't know if that's happening. You know, the snowplow comes around, clears the way, right? Then it goes around the block the second time, and when it comes back, you know, the road is clear for it to run through. So this is what I call a snowplow trade.
John, question. Somebody wants to know how they add candles to Bollinger Bands.
Candles, the Bollinger Bands. Well, first of all, Bollinger Bands is a study, so you can look at it in any chart setting. So we have multiple chart settings. We have bar charts, right? Colored bar charts. You have a line chart, and then you have candlesticks, right? And again, look at all the other ones that we have here. Just for nuance, you know, most folks look at close to close candles. I kind of like looking at open to close candles because really, if you think about a candle, is supposed to help you look at the sentiment of the market, either internally or over a longer period of time. So I like open to close because it's more true reflective of the sentiment of the market. In other words, market could gap up higher and come down, still finish higher for the day. Now a close to close would be a green candle because it closed up higher from the previous day, but an open to close candle would be a red candle because it opened up higher and closed lower, even though the close was higher from the previous day. To me, that is a sign that there might be, you know, a selling sentiment in the market that rises. So if it can overcome that, that's a very positive indicator, but it's also a sign that, hey, maybe what we saw was sellers step back in the market and push the market down. And then the following day, you know, you get that follow through to, you know, reversing back to where we came from. So just a little nuance there with the candlesticks.
Let's see here, John. Any thoughts on Nat Gas and UNG? What do you think's going on with those two?
Well, you know we've talked about this multiple times. Is we're in what is called the shoulder months of natural gas. Now we still have the physical month of August to get through, but we're already into the September contract, and we're starting to get into the October contract. So these are what we call shoulder months. And so even though if we get weather, usually you got to have really, really extreme weather to have an effect, or a hurricane to really kind of move the needle on natural gas, the physical natural gas market at this moment in time. So the UNG is reflective of that, and you can kind of see that right now. But soon we will be into the winter season, and again, one of the things I try to teach you folks is, you know, if you're going to trade a commodity or a commodity-based ETF, you have to understand, you know, the pricing of your commodity. And in natural gas, we go from a discounted market, a contango market, to a backward dated market. And so you can see here is even though current natural gas prices are around $3, if we go out to the future and we look at, for instance, November and December, they're at $3.50, $4, $4.50. So what will happen is as the UNG rolls forward, then those contracts are going to probably be more bullish as we go into the winter season. Then you'll get a little bit of a pop in the UNG. But right now it's depressed because we're still kind of trading the September and October contracts, and you can see that, you know, they're right around $3. Okay.
John, when you're trying to analyze the S&P 500, how do you incorporate or try to incorporate the VIX into your overall analysis?
For me, the VIX is just a tool. What's that?
Does it play any role in your thought process or not really?
When I'm picking options, so if I make an idea that I'm going to trade off of either the SPY or the ES, or any of the major indexes, I would look at the VIX to kind of tell me what strategy I want to look at. So in other words, if I have a low VIX, I know the options are fairly priced, so I'm more inclined to look at debit spreads. But if the VIX is elevated, then I know that there's a lot of volatility or implied volatility in the market, so I'm probably more inclined to look at credit type spreads. Does that make sense to you, Thomas?
Yeah, I think so.
How do you use the VIX?
Yeah, well, I only look at the VIX when I'm going to trade options in the S&P 500. Like if I'm going to trade SPY, I might take a peek at the VIX to see where it's at. And
Right.
but it's mainly with regards to the old adage, right? Which is when the VIX is high, it's time to buy, and when the VIX is low, look out below, right? So I look to gauge sort of what level it is relative to recent performance, and then try to figure out, okay, does it make sense to put an options trade on the broader market here?
So let's go back to what we were talking about with the S&P, right? It's the VIX right now in historical levels is pretty low, right? Well, we're knocking at all-time highs. So what does that mean? Well, that means that options are fairly priced. So that means that what I could probably buy puts very cheap, right? Or maybe even some of my call spreads, if I believe the market is about to make a new leg up, those call spreads are going to be cheap as well. So that's how I would look at the VIX in terms of trading the S&P right now, right?
Yep.
So I'd be probably buying put credit spreads and debit spreads and and call spreads. But if the VIX got back above 20, then I would reverse my style.
Yep, I think that's it for the questions, John. I got some breaking news on my phone, John. It's not finance related, but I thought it was interesting anyway. James Lovell Jr., commander of Apollo 13, passed away at the age of 97. If you guys watched the movie Apollo 13, Tom Hanks played James Lovell Jr. So rest in peace to Mr. Lovell.
Moonshot, baby, moonshot, right?
You got it.
All right. I did get a question today from Ed. Ed, if you're watching, I didn't understand your question. I know support reached out to you, so reach back to them, and then I'll answer that question for you. Okay. All right, brother. Good show. Did you like the show today?
I did. I thought it was great. I'm super excited, John, because two of my positions, Ethereum and Apple, are doing very well, and I'm glad Apple it came together at the right time, John, for us to do it on the show. So it feels good to cover that one finally.
So more money to buy turkey sandwiches in Turkey, right?
Exactly what I was thinking, John.
All right, Thomas. Thanks for helping me out. I appreciate all that you do for me. Folks, thanks for hanging out with us. I hope you guys enjoyed today's session. If you're watching on YouTube or one of the other social channels, make sure you give us a thumbs up and tell us what you liked about the show. Until next time, folks, best of health, manage your risk, and the good of all trading.